Good morning. So, uh, I don't know if anyone has tried DCA. Um, it's a little bit crazy. It's called dollar cost averaging. The basic idea is, at least the way that I like to practice it in a backtester like this, is you basically make the trades that you would normally make as best you can, but you don't actually use stops. It's a little bit crazy, so the odds of blowing an account are probably I don't know. It might be 50-50. It might be it sort of depends on how much risk you use, and so there's a lot of luck involved with it. You can avoid blowing an account by having a rule in place where maybe you're only allowed to put on a certain number of recovery trades, something like that. It could be, in my case now, I'm using this tester and not FX Replay because this particular tester allows me to set the margin so that I can actually trade with a restricted margin. As you can see here, I'm starting something I don't know, from last year, USD CAD. I'm going to do short time frames and use DCA and show you how quickly, or you'll either get to, let's just pretend this is a prop account. Let's say I'm supposed to get to 11,000 on the prop account, and I can't get to 9,000 is the max loss, and the max drawdown is going to be like 500. I don't know. It's going to be hard to keep an eye on the drawdown, but we'll see what happens here. And we're going to do DCA testing, and we'll see how quickly or slowly I can get this up to 10,000. Let's see, I don't want 15. Let's give me the 5-minute. And if I want to roll it forward to go to the next day or something, we're going to do that. It is, let's see, do I have, yeah, I have the correct time on here. That's fine. It looks like it's Sunday, so I don't care. So let's roll this forward to about 4, 5, 6 in the morning, sometime when it's reasonable that I might be awake. And let's go to town here. And the DCA that I'm going to using, it's a little bit dangerous. It's going to be 0.1 contract. Well, actually, that's not bad on a $10,000 account, is it? 0.1. Let's see. It's actually not bad. So let's do 0.1, and in every recovery trade, we're going to increase by 0.1 as well. And we'll see how that goes. It might actually take a while, so I may only go to 10.5 or something just to show you how this works. But let's go ahead and get started. Let's see. Order. Oh, this is going to be slow with this platform, isn't it? That's kind of annoying. All right, buy. So you'll notice I just bought, no stop. I'm just going to roll this forward, and hey, that was just a winning trade. I don't care. Oh, that's way too low. Oh, this might take some time. Yeah, that's going to take some time. That's a little bit less than I thought. Let's get a little crazy then. We'll just use a full contract, which is absolutely not what you would do in real life. Let's just go ahead and do that. So 111, and we'll see. I have a feeling I'm going to run out of margin pretty quickly if I do that. So let's see, just see what happens. It's kind of interesting. Rolling it forward. Let's see, what about that? That's a buy. Let's change this to 1. And then if you're wrong, you're wrong. Come on, there we go. 20 bucks. I don't know why I have to use a full contract in this. I'll have to go back and look at that. Okay, here we go. It's going down. And I'm going to go ahead and buy that. again. You notice I haven't even used any DCA yet. Is this a range? It's the middle of the day. I'm going to go ahead and short it, but I think it's probably going to go up one more time. I may have to do DCA with this. No, I did not. Yeah, it is going up now again. Now let's do this. Sell. And man, I still have not had to use DCA. That's a little scary. I'm gonna go ahead and do something that probably isn't great, and we'll just let that. At some point, I have to use dollar cost averaging. Come on, go down, go against my position. There we go, almost. Okay, so there's a spot where I'm down 46 bucks. Not great, but I'm gonna go ahead and say this is at the bottom of a range. I'm going to buy, except now I'm going to buy with 2, and you'll see what happens. Wow, there we go. And who knows how close I am to the margin on this. There we go. So now you'll see, here's an example of what I'm talking about. Oh, wait. What happened there? There's 2 buys. Why are they both... There should be one down here. Did I accidentally put a stop in or something? I'm not sure how the system did that, but it bought up above where the price was. Anyway, just going. There we go. I'm just going to close this out, start over. So no loss there. It's a bad time to trade this, so let's go ahead and roll it forward. This is Central Time. Let's see, let's roll it forward to like 5 or something. Alright, so now we've got this thing going on. What do we got? It's a pretty strong move down. However, this is really in an uptrend. So this is a classic case, so let's give it. There we go. Buy one. Buy market. And let's see if it goes against me. You're just not going to get to see this, are you? Okay. I should have held for a second leg. Jeez. Alright. Okay, here's an interesting one. Let's do the sell. Wow, really? Alright, I'm already up 10,234. This is like, I don't know, 2 days into it. Let's see. Dun, dun. This is an interesting pattern, except it's late in the day, so I'm going to go ahead and short. And that's kind of boring. That's fine. Let's just leave it on. There we go. And we got to roll it forward. I'm not going to trade CAD in the Asian session. That's not a thing. The reason I'm trading CAD here and not something else like Euro-Yen or whatever is A, spreads, B, margin that my broker has on it. That's the one problem with DCA is your margin and your drawdown. Those can be issues, and so there's certainly a certain amount of luck involved. I don't feel comfortable using DCA in a situation where the loss is unlimited. That just seems crazy, because it can, you can get caught on the other side of NFP or something and have an already be like 4 positions deep or something, and that's just not, I don't know, it's not good. So probably the way I'm going to try to use this since I do like it, I think, and the biggest thing about it is not using any stops. I mean, if you notice that there's no stops at all, which means that you don't have to be right in the same way. It's definitely, you're definitely risking a lot more. But in a Wanda, I can create sub accounts. So if I wanted to, I can create an account and peel something off and say, okay, I'm going to take $500, create a sub account, and I'm only going to trade that, but I'm going to trade it with DCA, and with the margin I have on that, I might trade tiny little lot sizes, maybe 0.025s as your R, and then you add a 0.025 every single time you're wrong and stuff like that. So you can still do that. Whether that's worth it or not, I might just trade the whole balance with DCA and see if I blow it up or not, which the whole balance is like 2,000 something. It's not that much. So it really depends on you as a person, what you're going to do, because you can't, nobody else can tell you what is and isn't an acceptable amount of risk. So keep that in mind. Okay, here's an example of the spot where I probably shouldn't sell. I'm going to do it anyway, so I can show you this. So there we go. So there's a spot I shouldn't have sold, and I'm under 78 now. I'm going to go ahead and sell again. Oops, I don't want to do that. Oops. To sell. And now you see where we're at is I've got two sells on. Let's see, one of them is just barely in the money. So there we go. So here's what you're looking at, is that situation where you were wrong and you sold, but the market decided to give you enough room to close that out. So close all. So I never actually made a loss on that particular trading idea. The two cancel each other out with a small profit. So that's DCA in a nutshell. You can do this over and over and over again, but eventually, the longer you do it, you'll blow an account up. It's very difficult not to, especially as a beginner, to not blow an account up doing this. But at the same time, it gives you a ridiculous win rate on stuff. I mean, you can, you can tell, because I haven't had to use it that much, that I already have an edge. I can just look at this stuff and not be terribly wrong most of the time. But using DCA allows you to do some interesting stuff with risk. Very dangerous. Not recommended. But hey, this is what backtesting is for, right? So let's go back to 1 again. We're not staying high. There we go. That's another one. Oh, I should have kept that in. Okay. Yeah, I have a tendency to pull out of stuff pretty quickly. I'm not sure. In this particular case with DCA, I don't know that that's a terribly bad thing. Now this is an interesting pattern. Is this just a range? Yeah, this is just ranging. Let's go ahead and buy. And this is on the 5, so it actually does have to move a decent amount for you to get anything out of it. Because the spread and everything else. I could be doing this on the hourly. It's basically works out the same. 3 pushes down. Let's go ahead and buy that. And I'll probably be wrong or not. It doesn't matter. That's the beauty of it. I'm just going to do another wedge. I'll close that out. Let's see, I'm up to 10,274. So yeah, and this is going to take some time. This isn't. Let's see. If we want to have fun with DCA, let's do something where, like, I should probably not. Well, actually, it's not a terrible idea. Short. Anyway, let's just keep going for a second here. And I feel like this wants to go higher. Actually, late in the day too, which is kind of a mistake. imagining that I'm doing an all-nighter here because it's 4 in the morning. Now I'm in a losing position there. Let's do another one here. Okay, here we go. Maybe we'll get to show you how dangerous this is. Nope. Alright, so you can see, and that's another profit, that's fine. And let's just buy this. Let's be able to spike here on news. One. I'm surprised I haven't run out of margin yet. That's going to be the limiter, I think, with this. Really is the amount of margin you can put on. I should have DCA'd that. Let's just go ahead and let's see, we're down, and now we're up. So you can see one of the biggest benefits to this, especially on a pair that tends to range a lot and spike a lot like CAD, although everything can trend uncontrollably, so be warned. But one of the biggest benefits to this really is that I'm not using stops. So it's a little crazy. You want to sort of limit your risk by having, only trading this way in one account where hey, if I blow this account up, it's okay. But you don't have to guess where things turn around, and that's the biggest benefit of this, I think, really. Sometimes you do also get in these positions where you've extended your risk out as far as you can, and then price turns around and you make a much bigger trade than you would have otherwise. That can happen, but usually you're getting close to account blowing leverage at that point, so it is not a great thing to see. Let's see. Let's see if I can. Okay, so now this just really went against me here. I'm bought way up in here, and I'm thinking to myself, this is terrible. Don't care. I do this. So you have to have. Oh, there we go. See, now down twice. That's 2 legs. Let's go for 3. I don't know where I'm gonna. Oh, am I gonna run it? Yes, insufficient margin. See, here's where it gets tough. I didn't realize I was going to run out of it that fast. Let's go one more, but yeah, here's where we might be stuck. No? Close. Alright, what I'm going to do is close that one, and I'm going to wait. Oh, look at that. Close all. That was lucky. So here's an example, and this is why you wouldn't want to use the a full contract on a $10,000 account, because if you're using 50 to 1, it looks like I didn't realize this. I can't go 6 contracts total, which is what I would need, or 6 lots total, which is what I would need to actually do it this way. So I think I've through some videos and some other things I've watched people do with this, that it's on 10,000, the most you'd ever want to go would be a standard starting size of 0.1, which is a lot less than this, obviously. So, but you can see using a 1, I've actually survived this long, and I've made 4/10 of the amount I would need to make just to get to the point where I've passed an eval, right? So this could have been a prop account or something. Shoot, see, that's the thing. I wasn't paying attention to the drawdown on that last trade, so now I'm not sure what that max drawdown, if I would have hit that or not. So that's a hard thing. I'm not a fan of prop. It's a tool, just like everything else. There's a lot of sketchy stuff out there, though, so beware. Anyway, that's it for now. I don't want to spend an hour on this, but I just wanted to show you guys that's a slightly different trading idea. You can really get away with a lot of inaccuracy, and you're taking on a whole lot of extra risk. Thank you. Goodbye.